If you're not in the Discord, you're going to want to be in the Discord. We followed today's downward action SPY to a T, forecasting it perfectly, assuming that the Elliott wave was down. We did assume motive mode, and it checked out pretty well. We followed the downtrend. If you're not in the Discord, get in the Discord. This is a symmetrical triangle showing the 1 hour. This does have a price target of like $447, and it's important to keep that in mind, that the bulls aren't out of the game yet. It is very difficult to know whether or not SPY is actually in a bullish trend or in a bearish trend. The prevailing trend, I believe, thus far is still down, and I am expecting that this count will be the correct count at the end of it all. It's a corrective ABC move with a couple of other ABC moves nested inside of it, and that's confusing. It's very confusing. There are a few peaks and valleys here that are more important than others. I have a couple of them labeled out on the hourly time frame, my Elliott wave style here, and we are bouncing off one right now. Bearish reversal confirmation at 410.55. Dropping below 410.55 will wipe out, invalidate, erase, whatever, one of the potential bullish Elliott wave counts. There's always multiple counts that are correct, possibly correct, and it's up to the analyst to figure out which one is going to be the actual correct forecast. For me, that means down. I'm choosing one that says down. And so I do have a bullish reversal confirmation here at 418 on the board. I think the price is signaling a further move down, probably to 401 or 393. I'm expecting these moves to happen quickly to catch people by surprise, and it's going to be a classic rug pull. Moving into AMC and GameStop on the hourly with after hours turned on. Let's talk about the construction of these three waves, A, B, and C. This wave C is occurring in a reverse triangle that's tilted upward. Bulkowski would call this an ascending broadening wedge. The price target for breaking out to the downside is the beginning of the pattern. This could also be part of a larger bullish breakout where we have a three-wave reversal coming into play, but you won't get that confirmation until the price rises above 730. In that pattern, we would be expecting the price to come down and test the breakout from this trend line, which started from August 2020. What year is it? 2022? So around $5. It doesn't matter how you cut it, how you slice it. In the short term, AMC is probably going to be coming down. Whether or not it makes it above 730 again is going to more or less decide whether or not AMC goes to 15, which it can do. I acknowledge that. I don't think it will. GameStop also found itself in an interesting position like AMC. It set an ABC move higher. I'm calling this minute wave 4, and there was a quadruple RSI divergence here where the RSI didn't make a full oscillation. That is to say, it didn't go from one extreme to the other between 70 and 30, but rather it fell and came back up and hit 70 over and over again without setting a meaningful high in the RSI while setting higher peaks in the price. So this is a quadruple bearish divergence. We did see a downward breakout from what I'm showing as an ending diagonal triangle in position C of wave 4. If that made sense to you, great. If it doesn't, then I have a couple of videos actually you watch. There's one called Elliott Wave Theory for Beginners, I believe. It's a lot. It's a lot. Elliott Wave is great. It's all logic based. Basically, there are rules to making progress, such as you're never going to complete your retrace the entire length of an impulse wave, which is the first wave of a trend. Just, yeah, read a book about it. I don't want to go into it right now. Okay, AMC, GameStop, SPY. Let's go ahead and have a look at the dollar really quickly on the hourly time frame yet again. And you're going to see this does definitely look like a flag. Bulkowski would say not to enter to a trade that has a high anti-flag until you get a confirmation breakout above the top of the flagpole. That would be at around the 103.7 level here. Of course, if you're trading the dollar, then this is just an index. So you can't trade this. It's relative to other currencies. I don't really trade it, but watching is important because its relative strength seems to have an impact on equities. I really can't explain why, but it does. And here we see the push pricing higher. The price pushing higher, and it wouldn't be unrealistic, I think, to find ourselves up at the 106 level. After all, this is a massive retracement from an even larger push higher, and I think we have one more big push up for a minute wave 5, and that could take us to 114. That's the expectation. It could be higher. If we get a complete 100% extension going higher from this level based on the height of that first minute, with that third minute wave, then watch out. The dollar is going to come roaring back. This, of course, bodes very poorly for silver and gold. SLV is not the price of silver, but it's an equity based on the price of silver. And I'm going to return this back into an hourly time frame. Sorry about that. You're going to see we had a downward breakout. Now we have a lot of support here at the 2043. If we do get another push down lower and set a new low from the last week, we can expect another $5 drop. So watch out. Silver and gold both might be going on sale. GLD is not really gold, but it's, again, another equity falling into correction now, breaking the uptrend it started in November. We could see a significant push lower. 158 is not my target right now. That's an old line, but that's actually probably a good target again. So I'm just going to leave it there. Silver, gold, the dollar. Let's talk about VIX. I was reading an article in the Financial Times about VIX and how VIX is remaining low, and this has to do with options related to VIX and 0-day expirations and how those are being traded in the market. I have a massive falling wedge through here, and I am supposing that we actually are going to see a massive run in VIX. A massive run in VIX. I learned about VIXI, but I was reading a Financial Times article talking about VIXI, and I gotta tell you, this looks like it could go up if VIX does. I don't understand how this works. I need to study this. We're gonna take a peek at SPXU as well. SPXU is where I'm pretty much YOLOing my account right now. Yeah, I'm making some very risky bets. I suppose that we are in waves 1 and 2 of another 5-wave form heading higher, the target being somewhere near 1450 and 14. Of course, I'm going to need to see this reach in the next 2 days. So if the markets make a big move down, I'll be okay because XPXU is the inverse of the overall market, well, of SPY specifically. So if SPY continues to crash, XPXU will bounce up, and hopefully I can make some money there. If not, I'm toast, and that's going to be okay. Every month I get myself $100. I've traded $100 up to $2,000 before. I figure if I can do that once every 20 months, then I'll be great. I would like to say that it would be more frequent than that, but we're gonna give it a go until then. So I'll blow $2,000 in the markets in 2 years' time. That's fine. That's an acceptable loss for me. I think that covers the bases. We'll take a peek at GNS too really quick. I saw GNS as an ending diagonal triangle, maybe an ending diagonal triangle. I think, yeah, ending diagonal triangle. And I'm measuring the overlap between the incoming wave 1 and that 4th wave coming down, and there is some overlap there. We have a downward breakout. Looking for a new low to really confirm that, but I would suspect that we're topping on GNS. If GNS is not topping, and if GNS breaks this high and moves higher, this could be the first half of a larger move. And you can see when I leave log scale there by manipulating the y-axis that the chart looks totally different. Yes, log scale versus linear scale. It's an interesting discussion to have. I think that's plenty of talking for now. Happy trading.